Welcome back to the Bitcoin layer. After some intense volatility these last couple weeks, we are excited to bring back our very own Johan Bergman for an update of what's going on chain. Johan, thanks again so much for joining us today.
Hi, Demian. Yeah, love to be here. So looking forward to this chat.
Yeah, so the last time you were on the Bitcoin layer, I think it was around October 1st with Nick, you were going through the price structure in these different zones. The market has obviously moved a lot since October. Can we revisit that chart? And can you explain what zone we're now within at this point?
Yeah. So before we start, I need to say that during the last few days, I edited or I adjusted the structure a bit because and I will go into it further. But um, I saw that some metrics, some indicators are more a trend thing. And I also wanted to point out on the chart, like more like a valuation kind of thing. So, and I saw that the two things didn't match like I thought it would. So I did change a few metrics, but yeah, let's go through it. So beginning of October, I think, yeah, I think we saw this with Nick. We saw this engulfing candle on the 3-day chart, and we were talking that to each other and saying that like this is a like a reversal sign, a trend reversal indicator that we see that bulls win. They gain grounds that they lose, but they win even more. So that's like a bullish sign. And then we've got that run up to a new all-time high, but it got faded. It got faded quite hard, and this was also because of the whole like I would like to call it a crypto liquidation event. I think it was more about crypto than about Bitcoin, but Bitcoin sold off in the event also, and then we got in this nasty downtrend, and I'm always looking also to the 3-day RSI. So this is the 3-day chart, by the way. I like looking to the 3-day chart because on a daily chart, sometimes we have these days, then we go up, and next day go down with the same speed and velocity, and it doesn't give the signal that I want to get. So with the 3-day chart, like it takes a bit longer to get confirmation, but you've got it faster than looking to a weekly chart, because Bitcoin sometimes, if Bitcoin rips, it's like almost only 6 days or something, or sometimes 12 days. And if you look on a weekly chart, you may miss the whole rally. But on a daily chart, you've got more fake out. So I like the 3-day chart. It gives some trend, and but also a quick enough of a signal. So we've got that sell off. Then we bounced back up, but we got rejected. And back then, the short-term holding cost base was around 114,000, and we didn't manage to keep above it. So, and there was, you can see it on those wicks. There were just people selling into the strength. So basically, we were already in a sell the rip type of mindset for a lot of investors and a lot of traders. So yeah, and from there it got worse. Yeah.
So we're now in this. I'm seeing in the zone. We're in the bearish zone. So
Yeah.
what's the difference between the bearish zone and the cautious zone? And then what does it mean that we're kind of approaching the true market mean?
Yeah, those are great questions. So this is also a good segue into the things that I changed since like the October talk with Nick, or I usually also post this with a letter or in our mean median mode. So what I changed is the zones are more like a valuation zone. Because what happened I was looking at the -1 standard deviation on the short-term holder MVRV. And that aligned really well. Like when we were in an uptrend, it aligned very well with this, or the MVRV ratio mean, or the AVIV ratio mean. The AVIV ratio mean is basically the ratio between market price and the true market mean. I switched to the true market mean ratio, and I will explain later, but it's basically, it's almost the same value. But in the future, it might get we get more signal from it than only looking to the MVRV. So now, so the -1 standard deviation on the short-term holder MVRV was already at 86. So the cautious zone became very big, and the bearish zone became very little, because the bearish zone was only between -1 standard deviation of the short-term holder MVRV and the true market mean. So then I realized this is not going to work. The short-term holder cost base is more of the moving average that we're going to use for trend, and I'm going to use the true market mean and some standard deviation above and below to really get some feeling for valuation. And this is why I will in the future show also these trend metrics. So if the 3-day RSI is below its moving average, then we're in the downtrend. And you can see it here. Like the all-time high in August, we were above it. And since then, we're almost continuously below it, except for this run up. But that turned out to be a fake out. So you don't catch everything. But basically, we've been in a downtrend for a long time if you exclude that fake out. And what I wrote in my last letter is we've also got another bearish signal. So the AVIV ratio mean is basically a market divider. And I can, if I switch already, yep, I can show you. Here is the true market mean. It's 81,000. And you've got these lines. So the green line is the the mean of the ratio between the true market mean price and the market price. So the ratio, the mean ratio is 1.2. So basically, Bitcoin on average is trading 20% above the true market mean, on average. But if you look to this pane below, I will put it on weekly, then we've got a better view. So focus not on the top, but on the lowest pane. Then you can see really these periods that we were in a bull market or a bear market. And this is what we wrote a week ago, that we now went below this, and historically it really shows that we've entered a bear market. I have some question marks around that, but that's why I'm going to switch back to the trading view oversight. But that's why I like to use this as a market divider between bullish or bearish. So below the AVIV ratio mean, we're in bear territory. And then we've got the true market mean, which is basically based off. And James Check and David Puel did an awesome study on on-chain economics. And they found out, like, they basically excluded like very dormant supply. So they look at coin blocks created and coin blocks destroyed. And they basically discount the realized price for blocks that haven't been destroyed, so haven't been spent, so are most likely been lost. And then you get we can see here the realized price is around $56,000 and the true market mean. So if you like discount those lost coins or not moving coins, you get to $81,000, and those are the active investors. So I think because and it makes sense because active investors are way more likely to act on price differences or price action than coins that or got lost or like never move.
What do you need to see now that we're kind of at a bear market? And I know James Check also said that we're now like in a bear zone. What do you need to see to identify like a potential reversal, or does it look like we're going to remain in a bear market? Like I'm looking at that one green candle right there, but RSI is still going down. Are you looking at both of them? I'm sure this is the question that everybody's asking.
Yeah. So let me first go to the next chart, and then I will come back to this question because it's a great question. And of course, it's the $1,000,000 question. So, but I think this explains it a bit more. So what we're seeing here is a fixed volume profile, and it's a fixed range of basically since Trump got elected. So not in office, because in office it was like the beginning of January, I think. But here he got elected. Price went from like 70K to 100 or almost 100K. And you can see the volume profile, and I explained it also, I think in the other video, that price that tends to trade in a range, and then you get this almost this normal distributed volume profile. And from that normal distribution, these lines, these value area high and value area low, gives like the one standard deviation of where volume traded, like 86%. Sorry, 68%. So what I want to see, so a few things that I want to like to point out. So I wrote in my latest, most recent letter about weakness, and what we're seeing here is this wick, this huge wick. We went one day from 86 to 80K, and then back above, and now 80, 89. So like this is strength. You want to see this. And I was talking on a panel in Bitcoin Amsterdam, and I saw the price went to 95, and I really was waiting for that moment that buyer stepped in. We were looking at this like this level for like weeks and months ahead. Like this is gonna be, and also James Check wrote about like this is the hodler's wall, and this is our last stand. And I was kind of excited for it, and then we just fell through it. Like there was no support, like because there was also the weekend, so the chart almost looks like there was resistance, but we just fell through because this is only because of the weekend. It was illiquid, but I think the sellers they reloaded during the weekend, get some Bitcoin to the exchanges, and then sell even more. And I wrote about it in the Netherlands. We have this saying of like if a sports team, and I would like to think of soccer because we're a country that really likes soccer or football, but I think you Americans call it soccer. And sometimes with Augustine, I talk about Barcelona versus Real Madrid, and he's a Real Madrid fan. But you get the feeling that if those two teams, they play against each other, and when let's say I'm a Barcelona fan, but Real Madrid, they know they're almost equal, and the match is like 0-0, and there's extra time, and with penalties, Barcelona loses the match. Then you see that there's enough resistance. There was a good fight. We lost, but maybe next match is better because, like the way the team played gave confidence. Even though they lost, it gave confidence that they might win the next time. And this is like losing like 0-6. Like you completely lose the game, but you also don't have confidence that the next game will be better. And that was really the feeling that I had when I saw this price action. And yeah, and it showed because we sold off way more. But this what we're seeing now, this is basically what I expected to see at 95, but we've got it only at 80K. but this is strong. So this is a wick means that the price went to 80, but buyer stepped in and got it back to like 84 and now above the value area low, back to 90K almost. But to really see improvement or even a reversal, I want to see a few things. Like I want to see price regain this area, and I think a lot of people are very bearish here. So they get bearish at support, and they get bullish at resistance. And I think what's most likely, like everything is possible. It's possible that we sell off hard to the downside, and it's possible that we run it back turbo. But I don't think it's probable. I think the most probable outcome is people getting bullish again, people getting bullish at resistance. I think a lot of people that bought here will sell the rip. And I also explained that in the letter, like this is a different, that the mindset changed. So instead of people buying the dip and not selling, they're selling the rip. So it's gonna be a tough cookie to get above this, but I think we run up in here, we get rejected, and then we'll trade in this range a bit more. Also think that this shows that there was a lot of support, so I think this will hold for the near future. And then to come back at your original question, what do we like to see? I want to see RSI trading above its moving average and really like gaining momentum again. And then the first thing I want to see us trade above that AVIV ratio mean, and then hunt for the short-term holder cost basis. But those are quite far away, and we have some major levels between. So yeah.
When you think about Bitcoin through a long-term macro lens, custody becomes one of the most important structural decisions you can make. You want durability, redundancy, and a setup that does not depend on a single point of failure. That has been Unchained's focus since 2016. Unchained is the leader in collaborative multi-sig custody and Bitcoin native financial services. They secure more than $12 billion in Bitcoin for over 12,000 clients. That means that roughly 1 of every 200 Bitcoin sits in an Unchained vault. Their custody model is straightforward. You hold 2 keys, Unchained holds 1. It is a resilient, shared custody structure that gives you an institutional-grade backdrop while maintaining individual control. Beyond custody, Unchained offers trading directly from your vault, Bitcoin collateralized commercial loans, a Bitcoin IRA where you hold your own keys, and business and trust accounts. Or opt for the highest level of private client service with Unchained Signature and get a dedicated account manager, discounted trading fees, exclusive access to events and features, and much more. If you are building a long-term Bitcoin position and want a partner that supports that responsibility without compromising sovereignty, visit unchained.com and use code TBL10 to get 10% off your new Bitcoin multi-sig vault. Right now, through the end of 2025, Blockstream is running its biggest sale yet. 21% off of all Blockstream Jade hardware wallets, no code needed, the price is automatically slashed off at checkout. This is the lowest price you'll see all year on the most trusted Bitcoin-only hardware wallet. Bitcoiners will always tell you, not your keys, not your coin, after they've seen exchange after exchange fail, rugging people out of their funds. But this isn't something you have to worry about if you own a Bitcoin hardware wallet. Blockstream Jade is the simplest, most secure way to store your Bitcoin, whether you're brand new or a hardcore stacker. Its sleek, low-profile design and full-color display with a dead simple setup lets you secure your sats in minutes. Pair it with their Blockstream app, their versatile mobile and desktop wallet, and you've got the smoothest onboarding experience in Bitcoin. As your stack grows, Jade scales with you. Air-gapped setup, fully functional QR mode with a built-in camera, native multi-sig support, and tons more advanced features. Head to store.blockstream.com right now and use code TBL for 10% off at checkout. Stock is limited and the deal will last through the end of the year. Secure your wealth before the next leg up.
Never sell, just borrow with Arch Lending. Arch lets you borrow against your Bitcoin, unlock cash without selling, instantly access a Bitcoin-backed line of credit for as little as $5,000 for up to 2 years. There's no rehypothecation ever, and insured custody at Anchorage Digital. Stay long, stay liquid. Go to archLending.com/TBL and use code NIK, that's NIK, for 0.5% off of your interest rate.
So just a quick follow-up about those the volume nodes. So
Yeah.
how fixed in the short term are those volume nodes? Like how often do they change? Like how long do we expect if Bitcoin's likely to be bouncing between these zones with the bottom being the support and the top being resistant? How long do these volume nodes usually stay at the levels as they are?
So that's actually a very good question, and they with um, with the exchange data, like this just shows the history, so they never change. They only may become bigger at places that we trade even more. So this is just how this is just the history of all the volume that has been traded since November 24. But on chain, you could look at how the URPD low. So this on chain, you can really see like if somebody bought at 80 and sell at 90, you can see that UTXO disappearing again. This is not what we're seeing here. So this just shows the his historical volume. I think I know that James Check has some great charts on those URPD nodes that also change over time. Those are great charts. I don't have them right now.
So Johan, you brought up the crypto like leveraged wipeout that happened in October. So I want to ask you a question about leverage now. Where are we with the amount of leverage that exists in the market now? Does it look does it look bullish or bearish? And how did that deleveraging how is that affecting us now?
What we're seeing here is at the top pane the Bitcoin USD price, but I put it at the same scale in a percentage change with the open interest. So the open interest are the like the white and gray candles, and the Bitcoin price is the yellow and green candles. And what we see here is there was the crypto event, like the liquidation event, and you can see here that the open interest, like it dropped. Like the drop of Bitcoin is almost not as as good to see than as the huge wig down of the open interest. So the open interest really got wiped out. But something really not remarkable, but just interesting happened, because while Bitcoin was trading down, the open interest stayed flat. So basically, we were already back at the like relative at the same level. But recently, and I'm gonna switch to like the 15-minute chart, and it's basically too of a low of a time frame for TBL, because we're looking at macro things, and this is really micro. But to answer your question and to see how price moves, you can see the since 2 days open interest is declining while the price is gaining. And also something what I find cool to see is this behavior. So what we're seeing here is the price creeps up, and the open interest also creeps up, but you can see here that the aggregated funding is negative. So if the open interest rises while the funding rate is negative, you almost know for certain these are shorts. So people are adding shorts to their like to their overall positions. And then you can see here this green candle. This is like a short squeeze, like a little one. It's not a big one, and this is what you like to see at, I don't want to call it a bottom already, maybe a local bottom, but this is what you see when people, like, they're long all the time. So they're long like since 90K until 120K, they're long, and even, or they get long when everyone's bullish with price at resistant. Then they lose on their longs, and when we're at 80K, they think, all right, let's switch game plan, let's go short. But they go short at the bottom, and then you've got these, when more people are wanting to go short instead of long, these funding rates get negative, and then it's easy to stop them out to the upside. And in the last hour, we've got a nice rally, and we also seeing a bit of a short squeeze. Like, these are really tiny. I think those are, if I switch back to a higher time frame, and if we compare it to that liquidation event, you cannot even see that green candle almost. So it's very tiny, but it is driving the price now, and I think it's a good sign. Another good sign is we're seeing the Coinbase premium get back, and what that means is, so you have the like a Bitcoin index price. So Bitcoin index price is like a combination of the biggest exchanges. It's also being used. This is a technical story, but this is the one of the few things that got wrong during the crypto liquidation event, because Binance was matching their margin calls with only their own price for a certain, I think it was certain stablecoin. I think it was like this USDE of Ilana, and people can use that to their advantage, because if they can depack that USD, and the exchange uses only, so not an index, but only their price as their margin, like to basically set the settings of when somebody get liquidated or margin called, when that Bitcoin price goes down, or that or that stablecoin price goes down, people getting liquidated, even though on other exchanges there's a big big difference in price. So those index prices are usually used to have a more like a fair price. And if we see that Coinbase premium, so that's the Bitcoin price on Coinbase versus the index. So if we see there's a premium, then normally there's a demand for Bitcoin at Coinbase more than relative to other exchanges. And when we see a discount, then that means people are selling at Coinbase, and that's why there's a little discount versus the index price. So this is basically, you can use this as basically as a sentiment gauge, and I like to see it getting back up again to normal levels, and even to go hopefully go green, because that just shows that most of the sellers at Coinbase are, or even there are more buyers and sellers on Coinbase, basically.
Overall, just since open interest is lower, is that healthy for the market? Is this could that be considered a healthy reset?
Yeah, I think so. But I do have, I think, a slightly different opinion than others. So let me check if I can show you that, because this is something that a lot of people miss. So let me put this on regular. So this number of open interest, I will put it on daily. So this is the amount this is the aggregated open interest, so on different exchanges, and it's 22 billion. But if we can also put this not in billions, but in Bitcoin. And then what we see is something interesting, that during the bottom, like the 2022 bottom, like the open interest in Bitcoin terms was a lot higher. So it was 360,000 Bitcoin. So the notional value was an equivalent to 365,000 Bitcoin. And now the notional value is equivalent to 250,000 Bitcoin. So the open interest measured in Bitcoin went down. And that doesn't, and also in the percentage, I think it's around, what did we say? I think usually between 3 and 5% of the Bitcoin market cap. So, but yes, sometimes you see that open interest is running faster up than the Bitcoin price, and then usually says that the price is driven by speculators, and that's right. But I think it's just also expected that the open interest in dollar terms goes up when Bitcoin goes up. So yeah, I think you just have to, and that's why I changed the chart to like percentage versus Bitcoin. Then you can see like intuitively if the open interest went up faster than Bitcoin or not. Yeah.
Got it. I want to ask you a little bit about whale action. So a lot of people on Twitter are seeing large whales are offloading a lot of their Bitcoin, and that's drawing some concerns. How do you see that situation right now? Is that true? Is that affecting sentiment in the market at all?
I think so. I'm gonna change to the on-chain charts that I prepared. I think the whale action. I don't have the chart from James, but I think James had the best research on this, and I think he showed that it wasn't just because people were telling like OGs are selling, but like OG, like what is the definition of a Bitcoin OG? You know, because some people already hold Bitcoin for 5 years if they bought like the top in 2021. Yeah, even at the end of 2020, they're in Bitcoin now for 5 years. Yeah, is somebody an OG or not? And we saw a lot of coins got sold from 5 years and 3 years, and not even the ETFs. I think the ETFs really stood their ground. So the OGs is really like 10-year plus, and that wasn't really the case. I think James showed that. I think it was mostly people who just bought after or in 2020, 2020 or afterwards, and they just. I think most were just getting some chips off the table. I think also I've got a lot of anecdotal evidence. I went to Prague, I went to Lugano, I went to Bitcoin Amsterdam, and all those conferences. I also heard a lot of people say that they sold some Bitcoin at 100K, but also people who are still convinced of the 4-year cycle, thinking that in Q4 we top out, and a lot of people think that this was the top, and it might be the case that this was the top, but think the whole market structure has changed. So I think a lot of selling pressure came from just people holding for a couple of years, not per se whales. There were just a few of those examples that there were a few whales that really sold with like 10,000 Bitcoin clips. But I think mostly it was just people taking profits, upgrading their life, and just also thinking that they might have the chance to buy back lower next year.
So where are we right now with realized profits? You were talking about last episode with Nick about like a reset point being when realized profits is getting close to zero. So where are we right now?
So yeah, Demian, that's a great question. This is the chart where we're seeing the net realized profit and loss on the 30-day change. And we can compare short and long. So this is what I described that I wanted to see, but I've news. This is basically not what we want to see, and I will show you. Because this is why. The difference with the other times, like in August and in let me check. Yes, in April, the reason that the overall profit taking went to almost zero was because long-term holders were stopped selling large amounts, and then of course short-term holders, like in these troughs, short-term holders are at a small loss, and then combined, the overall profit taking is not much. So it's still $1 billion a day, but it's not much. But now we see that the long-term holders still selling a lot, and in USD terms, it's still, and it went up 38 billion. But it's the short-term holders that are really taking the losses, which combines to a low value. But yes, we're seeing it reset, but it's not the way I wanted to see, because this is really capitulation, and there's still long-term holders selling. So I really want to see the long-term holders stop selling. Let's run through a few charts really quick. This is like the supply in a loss is about 30%. So 30% of the supply is in loss, and that's mostly also a bearish sign. And for the unrealized profit and loss for the short-term holders, there was like also an area that I pointed out early on, like that 100 billion unrealized losses could be the bottom for this dip if this were to be a dip, and that's like equal to the other dips where it was like 20 or 20-ish% of the cohort's market cap, and we went below it, but we're now back above it. So, and this is the weird thing. I think if we have a strong enough, and that's also why what I expected at 95. Like if we got really strong reaction of the market there, then that would be a sign of a dip, and we're still in a bull market. But we didn't get that reaction that I wanted to see. So now I'm not sure. So that's why I also wrote like, expect us going lower. So if we look at the net unrealized profit and loss for the short-term holders, we did tag the field or the area that I thought we would tag, and it was around 100 billion of unrealized loss holding by the short-term holders. But I wanted to see, let's change it to relative to the cohort's market cap, like at 20% of unrealized losses. The other times, a bull stepped in and really got the bull run going, and now we fell through. There was the 95 range. We fell through it, and that bit of the lack of that strength is concerning. We are back in that area that I think that the top heaviness is less, and because also the short-term holder cost basis came back from, I think, $114,000 to $104,000. So the top heaviness, because people are capitulating, new short-term holders are buying at 80 and not 120. So that the top heaviness comes lower, and those who bought at 80 are much less likely to capitulate. So I think those are good signs. again, I rather see this kind of reaction and strength in the market at 95. That would be really a sign that the bull market was continuing. Now I'm not sure. Could go either way. We really need to see how this range is developing. One thing I wanted to point out is that I saw really interesting divergence between, I think, investors. Because if we look at the options open interest, and this is a chart by James Check, you see IBIT and Deribit here. But he also tracks the put-call ratio. And there was this divergence since August that people on Deribit were buying more puts than on IBIT. So on IBIT, the put-call ratio went down, meaning that more people bought calls instead of puts. And on Deribit, there was the exact opposite. So there was like this growing divergence. And this diverging is getting smaller again. But something that I checked when I prepared for this conversation with you is the current put-call ratio at Deribit. This is 0.55. And at IBIT, it's 0.49. So IBIT still a bit more bullish. But then I found out if I go to June 26th, the put-call ratio on Deribit is 1. And like that's bearish. Then we're seeing a put-call ratio of 0.5. This is basically what I expect when people are bullish on Bitcoin. We think like in 1 year it will be higher, or in 6 months. So, but if we on Deribit, if we go to September 26th, that's the farthest out. It's already 0.5. So this shows me that I think the crypto native investors are bearish, or more more likely in defense mode. But this could be the explanation that people are like this PTSD of other cycles and think that we're really going in a bear market and it could take a while, or they know something that others don't know because they were right here in this time. Because look at this, since August, then the price was at 120, and people on Deribit, they started to buy puts, while people on trading IBIT were buying calls. So I think this is a really interesting thing that I'm gonna watch, because they're just telling the, like, if this is, they are positioning or not, we're not currently like in the overall, because this is measuring the overall, like I showed you here with all the expiration dates. This value in the checks chart is like all expiration dates. But if we really dive deeper, and we're like March is 0.8. So also relatively a lot of puts, and June is even worse. So I'm gonna really keep watching that, and hopefully it will tell us some more about the crypto native market. And yeah, I think if they buy puts, they also do other stuff that might defend their portfolio.
Mm-hmm. So what are you looking for exactly as you follow this? What do you want to see?
Basically, I want to see calls. But I'm as an analyst, you just need to be an observer, and I don't want to get my own bias in there too much. I just want to observe, like, what are other market participants doing? Are they just, maybe they're buying puts, just not selling their spot Bitcoin, just buying puts to defend themselves, or they're buying puts and they're selling Bitcoin and really have a directional bet to the downside. But yeah,
if we end on a red, and Bitcoin's 4-year cycle is broken, do you think there's going to be some behavior change? I mean, I think it's interesting you brought up that people were buying puts because they believed we were the end of that cycle. But if the cycle's broken, do you have any intuition as to what you think like the market might behave around then?
Yeah, I let me say this. Like, I hope that we close red on this year. I hope that we break that 4-year cycle thought as soon as possible, because this also prevents people from just getting into Bitcoin like on a regular basis, like on these passive flows, because no, they're gonna wait and they're gonna try to lump sum this in a bear market, and they also like connecting this with the halving, and they say 18 months after halving is stop, and then like I don't know, they make this calculation like 26 months or like 30 months after that halving, then we're in the depths of the bear market. And I think the halving doesn't have that impact anymore. It's much more like other drivers, like liquidity drivers, like TBL is also exploring so much. And I think Jeff Park wrote yesterday a great Substack about more like how investors, like the ETF investors, are acting to price changes, and like they're targeting like a 25% CAGR per year. So they likely sell when they've got on this 50% return on a 2-year basis. And he's talking about what would the cycle look like, and he's giving a he's giving his opinion that it might get like this 2-year up, 2-year down, because of Bitcoin becoming a part of like the institutional portfolio, like a bigger asset. And so I hope that we see red, and I hope that people respond to that, and because that also gives like opportunity for the next year. If this year was a red year, then maybe next year is a green year again. But yeah, for me now, I'm really gonna watch the price action. I really want to see how levels are defending, or how bulls are defending levels, or how bears are selling higher resistant levels. I like the look of this one. This is strength. I wanted to see this at 95. We didn't get it. So yeah, let's see how this develops.
You know, I also watched this interview with Jeff Park on the Pomp podcast, and he
Oh
was
yeah,
saying like a lot of the cycle is a self-fulfilling prophecy. So if we end on green, then people might believe that the cycle is intact, so they might wait to step in until they
yeah,
believe is the bottom, and then that would just
yeah.
be
Yeah, yeah,
unfortunate for
yeah,
everyone.
that would really align with my thesis, and that's why I really want to see. I'd rather see a red year now, and get let's get rid of that 4-year cycle, and just yeah, let's get to other cycles.
Absolutely. Well, Johan, thank you so much again, and thank you all of you TBL pros for watching. We hope you guys all have an amazing Thanksgiving and a happy approaching holiday season in general. So, Johan, thanks again, and we'll
Damian,
catch you guys later.
yeah, it was a pleasure, and for all the Americans out there, happy Thanksgiving already. Yeah.